Welcome back to the monthly market update. It is July, believe it or not, 2025, and I am Mary Bartos.
Randy Williams with TBF Mortgage.
We're talking about Southwest Florida, but Randy, we're going to start talking about national first, and then as always, kind of break it down. In YouTube, you can always go to the chapters and check them out if you want to skip forward some of the information that we provide. But the first topic of really at hand today, Randy, is new construction. And it's really hot right now for you as a buyer to get a really good deal.
Right.
Now let's talk about why that is. In the last year, how about monthly inventory? What's happening?
Another month and a half. It has definitely ticked up. And I think it's honestly because there's some incentives with mortgage rates there, and they've also lowered their prices. So it's a little cheaper than going to the secondary market.
Totally.
Yeah.
So as you can see in this chart, it's 9.8 months, and it was as low as 7.9 in September 24. Right. So this is national. I don't have the local numbers, but I do have local numbers on new construction as it relates. Mm-hmm. Stay tuned for that information. So go ahead and tell us what Zonda is saying.
57% of new home communities in May offered incentives onto on-built homes, and 75% of quick and move-in homes.
Yeah. So you're going to get a better deal. That makes sense. They want to get it off their books. They've already started the construction 12, 18 months ago, whatever it takes in your area, and they're going to give a deal on it.
Yeah, I mean, the carrying cost alone of carrying them a month over month, they're trying to move those homes.
That's right. Yeah. That's right. So what about this? New home buyers are getting an increasingly large mortgage rate discount, Randy.
Yeah.
You sell mortgages. Mm-hmm. What is going on in this new construction area?
I think a couple of things, honestly. When the mortgage company or when a builder owns the mortgage company and then also owns the title company, when they're triple dipping on those things, there's some money that they have to play with that you're not going to see on the secondary market. So there's some incentives there.
Absolutely.
Yeah.
And, quite honestly, the thing that is really critical is affordability.
Yeah.
So they're giving concessions on the backside to do that mortgage buy down. But that we can talk about that a little bit later because that is certainly something that you can do.
Yeah. I mean, we do the mortgage buy downs, but when we really look at those numbers, it makes more sense for people to have $10,000 or $12,000 less cash to close so many times than it does to have a lower payment for a short period of time. Mm-hmm. Most folks think we're going to get into a refinance market again here, hopefully soon.
Okay.
Yeah.
Well, stay tuned for that in a future episode.
Yeah.
What's Jeff Berner, senior economist at Realtor.com, saying?
The main reason that mortgage rates are lower for new homes is that builders are offering below market rates to buyers as incentive to close deals, primarily through mortgage rate buy downs. That's another way they're doing it. They're definitely buying it down. But again, when they have title and they have the mortgage company and the builder owns all of it, there's just money to play with.
Yeah, there's money that moves around.
Yeah.
Again, not to kind of belabor this topic, but more and more builders are also cutting prices.
Right.
So now I can get into it with a mortgage rate.
Yeah.
I get a lower price. I get a good deal. Is it a no-brainer for me to go ahead and buy new construction?
I mean, it's pure and simple free market. Homes are getting a little bit more expensive to build. But when the inventory goes up to a certain level, I mean, they have to do what they have to do.
That's right.
To move inventory.
And Randy, when I got into this business in 10, I sold a lot of new construction because there was a lot of resale out there. It was pretty pricey. And people in our market, some of our second home, they've been there, done that. They don't want to do a remodel. Mm-hmm. They want to walk in and have it done. And that's what they did. They bought a lot of new construction for me back in 10, 11, 12, 13, 14.
I mean, we have a lot of it too.
Yeah.
I mean, 100%. Yeah, absolutely.
Yeah. And we'll tell you those numbers in a minute. Mm-hmm. So what's NAHB saying?
The latest HMI survey also revealed that 37% of builders reported cutting prices in June, the highest percentage since NAHB began tracking this figure back in 2022.
Yeah, we get it.
Mm-hmm.
We get it. Okay. So I think we've beat that horse down, so to speak. So let's talk about seller-buyer imbalance.
Yeah.
This chart itself is really interesting to me. So it's the number of buyers and sellers in an active market. Mm-hmm. So the green is sellers and the blue is buyers. So 13, 14, 15, and it kind of crossed over in 16. Mm-hmm. We were, quote, in a buyer's market because we had more sellers, less buyers. Mm-hmm. And then, of course, we all know what happened in 1920. Mm-hmm. All of that came down. Mm-hmm. As we moved around, it was so crazy. And there were not enough sellers. We were in that multi-offer situation. And that came through to about maybe 23. We got in a little bit of a balanced market. And look at where we are now. We have so many more sellers than buyers.
I mean, when you factor in those COVID years, how much of a buyer's market it was because of super low interest rates.
Yeah.
This is just a bounce back because of that.
Yeah.
It really
I like
is.
that. Bounce back.
It is.
Yeah. Okay. So Associated Press.
Yeah.
What are they saying?
Fewer buyers means less competition for home listings and more pressure on the sellers to dial back their asking price and make other concessions to help get a deal done. That's a stark reversal from just a few years ago when it was uncommon for homeowners to receive offers well above their asking price. Multiple home offers. I mean, months ago, not years ago.
Right.
Like, honestly, last year.
Right. Yeah. Maybe 23. We are in 25.
Yeah.
Maybe a year and a half ago. But we still have had some multiple offers, don't get me wrong, but they're very different. There's not 5 or 10 standing at the door, going in, stopping, which was insanity. I'm not even going to do an inspection. Are you kidding me? Like, why wouldn't you want it? It's,
I could tell you stories too. Like,
crazy.
Yeah, we all know them. Yeah.
It's crazy. So that was what was happening. Not healthy, not great for the market, not great for the consumer, quite honestly. Great for the seller, but not great for the buyer.
100%.
Per se. And I don't mean to put that I'm one versus the other because it depends on which side I'm sitting on.
Yeah.
Andy Walden, he's the head of mortgage and housing market research, the Intercontinental Exchange. What's he saying?
We continue to see an inflection in the housing market as home price softening expands beyond the Sun Belt into the West. With inventory levels beginning to normalize across much of the country, prospective home buyers are finally beginning to see some long anticipated price relief. Totally see that in the market right now.
We've got a really fun chart for you that we're going to share.
Yeah.
So we talked a bit about this, Randy. In some markets, yes, there's some adjustment of price. So there is, an adjustment down. But we're also seeing decelerating. So when we were getting 25% increase year over year, now we are less. If we get 2% year over year, that's kind of a normal market.
Right. I mean, again, the majority of folks are going to use a mortgage, maybe not so much here, but in most of the country. And when home prices get to a certain level and those rates just stay high, it's not really a rate issue anymore. It is an affordability issue. And that is coming back down a little bit right now. That's what we're seeing.
I love that. Yeah. So what's NAHB saying?
House price growth slowed for the first quarter of 2025, partly due to a decline in demand and an increase in supply. Persistent high mortgage rates and increased inventory combined to ease upward pressure on house prices. These factors signal a cooling market, allowing rapid gains seen in previous years. I mean, that's basically what we just said.
Yeah. And I will tell you here at the Bartos Group, our personal numbers, our first quarter was way down from what we've done other previous years. Now, second quarter came up and we're starting off the third quarter really well, like higher than, almost the top last 5 years that were higher than those. So it's going to be an interesting, second half of the year to see what happens.
Yeah. I mean, not to belittle it, but we had an election. I mean, that does freeze people for whatever reason. It just does. Yeah. So once we get some stability and we start to plan for the next couple of years, there's always going to be people that want to buy and sell homes.
We all have to move for our reasons.
Right.
Yeah. Now, this chart, you and I talked about it. Like, should we show it? Should we not? But 22 of the 50 largest metros had falling home prices. So that is a falling price.
Yeah.
Depreciation of their asset, which no one ever wants to hear. Deceleration is one thing, but depreciation.
Yeah.
Now, a lot of these are in those sand states, Texas,
Vegas,
Florida, Vegas, California. When you look at the red on this side and you turn your phone or whatever device you're looking at it on, turn it sideways and you can see those states. But you can look at the green states, look at that. The one on top is Cleveland, Ohio, of all places.
Okay.
Louisville. New York. I mean, those folks are actually seeing good increases, 4, 5, 3, 2%, whatever. Again, it's going to depend on where you're living in the world.
100%.
And Randy, I'm just going to talk about it on this slide. What we have a lot of people doing is they've got their house on the market up north and they're in this crazy multi-offer, sell it on the open house weekend. And then they sell that for good price and they come down here and buy it at a good price here. So good price to them high, good price buy to them lower. It's a great time to do that.
Yeah, well, anytime you're going to buy and sell at the same time, you're buying and selling at market. So there's no hit. It's a lot of times when you're only doing one of the two that you may take a little hit.
Right. But if you're selling one at higher, up north or in a quote snow state, and you're getting one at a great value here, wow, it's a no-brainer.
Come on down.
Come on down. The price
Give
is right.
Give us a
call. What to expect in the second half of the year? So what's Greg McBride with Bank Rate saying?
Yeah, home price appreciation will be tepid when looked at from 35,000 feet, with many markets seeing little to no change in prices, but rising inventory has some formerly hot real estate markets shifting from a seller's market to a buyer's market, and will be susceptible to price declines. That's us right now.
That's right. Yeah. And that's okay.
Yeah.
A lot of people are sitting on a lot of equity in their homes. Yeah. So this is rather interesting to me. This is the 2025 price forecast. And when you first saw it today, you went, wow.
That's changed.
Because it's changed. Yeah. It's now average of these 7, 8, how many of them are there? All 8 is 1.9%. Now it's a plus. A lot of people are bullish like Fannie Mae, but you have Redfin and Zillow that aren't.
Well, yeah, all the banks are positive, and then your real estate websites and things like that. Yeah, interesting.
So Mike Simonson, co-founder of Altus Research, what is he saying?
The vibes for home prices are growing much more bearish. For the rest of 2025, we can see that inventory levels, especially in the Sunbelt, are now sufficient to put downward pressure on home prices. This seems likely to continue and spread to more states. However, there isn't much data that shows significant price declines yet.
Yeah.
Yeah.
Makes sense. Interesting. Most home price forecasts are trending down, but look, there's some on this chart that are in the green.
Yeah.
They're actually up. We have 2, like we talked about it, that are way down. So you saw the other chart with the bar chart, and now this is kind of to say where we were and the original forecast and where we're forecasting now.
Yeah, I think most markets in the country are steady. There's just a couple that are really going down, right?
Mm-hmm. Yeah, with the increase. So that's kind of
100%.
Adjusting the whole, this is a national picture.
Right.
For sure.
Yeah.
So James Egan, housing strategist at Morgan Stanley, what's he saying?
Looking ahead through the rest of this year into 2026, we don't expect mortgage rates to come down much, at least not through the third quarter of 2025. So again, affordability, it is going to remain pressured.
Yeah. Near and dear to your heart is just this, the mortgage rates.
Yeah.
Boy, Randy, I don't know. Has it been 3 years that we've been talking about mortgage rates? We're like, they're coming down. They're coming down. Now everybody's saying they're kind of flat.
Yeah. I mean, again, we're still dealing with some inflation stuff. We really, truly are. Most people think that if the Fed cuts the rate, oh my God, mortgage rates are going to drop. The bond market plays a big portion for mortgage rates. The Fed rates are going to be your home equity lines. They're going to be your cars. They're going to be your credit cards.
Okay.
That would be a lot of relief for a lot of Americans. And we definitely do need that. But mortgage rates are going to slowly trickle after that.
It's interesting, though, and we've talked about this time and time again. Yeah. The average over the years since, 1950?
Yeah.
Has been 7%.
Yeah, the difference of that, it is. And so the rates themselves, again, I don't think we have a rate problem. The problem that we have is home prices are so much more expensive at these rates than they used to be back when, we were little. That it is an affordability problem. Rates will pull it back a little bit, but that's going to cause prices to keep going up.
Right.
So which way is it going to go?
Right. Well, and wages are a lot higher. So, you get that balance, but I hear what you're saying.
Yeah.
I hear the gist of what you're saying.
Yeah.
So what is Salima Hap saying, chief economist at Cotality?
The prospect of elevated mortgage rates through 2025 suggests that the housing market activity will continue to be challenged. I like corrected. I don't like challenged. A little bit of a correction.
Yeah. Well, or just the fact that, we're going to struggle with this affordability. How do we help people get into a house? Now, we just looked at the numbers. 50% of our buyers' sides are cash.
Yeah.
But we deal with a lot of second home that are bringing cash from somewhere else, which you have a lot of great products. We're going to have to do one of those, talk about some of these cool things that you're doing for people that are cash rich in a home.
Sure.
Right.
Absolutely.
Let's definitely do that.
Yep.
So sales will remain low, but slightly up from last year, according to actually NAR, the Mortgage Bankers Association, Wells Fargo, Fannie Mae, and Zillow.
Yeah.
So, it's a good sign. What is newly built home sales? They're going to be what? Unchanged?
We'll see. I mean, it looks like they're going to go down maybe just a little bit or unchanged. We'll see what the incentives they do and what they do with pricing. Like they have that flexibility to do it. So we'll see what they do.
Yeah. We have some time to check in on that later.
Yeah.
Our friends at Realtor.com, what are they saying?
Chief economist Robert Dietz says that given current market conditions, the home builder trade group is forecasting a decline in single family starts across 2025.
That wouldn't be bad. To have a decline in starts. I mean, they're going to get all this inventory. They're going to get it sold, and that builds more demand.
Yep.
If you have less. Okay, Danielle Hale. What is she saying at Realtor.com?
Shoppers in the market for a new home will still have options in many markets and are likely to be in a good place to negotiate. But builders are already adjusting their outlooks and slowing the development pipeline, which could mean that new homes are harder to come by in the next year.
Yeah.
So it's now, if you want that incentive.
Yeah. Do the new home now, the new construction now. Yeah, if you love the resale because your favorite golf community, you want to be by the beach, whatever, they don't have that in your price point, whatever, then go get the new construction
100%.
Because you're going to make a lot of money on that.
Well, that's where the deal is right now.
Right. Yeah. And quite honestly, if we look at, our market, Randy, we pulled a list for Southwest Florida, new construction percentage of the active inventory. I was kind of blown away. Look at Cape Coral.
Yeah.
It's over 20%.
Yeah. This is an interesting slide. The first time I saw it too. Cape Coral, a lot of building going on down there. I've been doing a lot of business down there, which I didn't when I first got here.
Right. And,
affordability.
One of the agents on our team said he was blown away. They got a new construction home, 2,000-ish square feet for like $357. That is a great price. Where else can you get that? Now, you've got to decide where you want to be. Like, are you going to drive? What's your job? All of that. So is it in that, is it a school system? Whatever you're looking for. But what a great value.
But if I'm retired, different ballgame.
Then I just got to drive to lunch and dinner. But you can kind of see the rest of them. Naples is a little bit higher. It's like 6 or 7%. Marco's under that with Bonita and Fort Myers trailing.
I mean, Naples and Marco have, restrictions in like land and stuff too.
Right.
They've been very, very developed.
Right. Exactly. Yeah. Now, one of the things I like to do, because we talked a lot about prices going up or down, you can see Fort Myers right now, unfortunately, in the last year, median close price took a 9.2% cut in prices, followed by the Cape, then Naples, and Marco was even. Now, that's month to month of year over year. So 1 year ago, and this is June data, which I thought was kind of interesting.
Especially because it's such a higher price point.
Yeah. Now, I always like to throw this in, Randy, because days on market. So this is what, if you're a seller out there, I'm going to tell you this story. If we get the price right, here at the Bartos Group, if you list with us, our marketing plan is amazing. The only thing we're testing is price. Average days on market is what it sells at, right? The ones that sell at these days. So Naples is 70, Marco's 88, Fort Myers 71, the Cape's 56. But then you have all this other inventory out there that's 10 plus months of inventory that's sitting. And I call it, you go into inventory jail. If I don't sell it in these number of days, then I'm pushed over here and I got to work really hard. So how do I prevent myself from going to inventory jail?
You just have to be honest with what market you're selling in. It's not 2023. It's not 2022. So again, if you're somebody that has to sell, pricing is pricing.
Right.
I mean, it is.
Price it right, because there are some agents out there that will actually want to buy your listing. So you list with them.
Yeah.
They don't know how to sell it. They're not spending any money on it. And then it sits there for a long time, for the length of your listing, and you never get an offer. And they're not talking to you about improving the price. Now, we may at the Bartos Group, because you've really focused in on a price, and if we feel that we can sell it and go down that path, we may take a little bit higher price. Yeah. But every time I do that, I sit in inventory jail.
You know as well as I do. I mean, I was an agent for 14 years. I would always tell people, if you want to overprice it, the longer we're overpriced, the more it helps me as the agent. I'm going to get a bunch of phone calls. I'm going to sit here and do open houses. I'm going to meet a ton of people. It's not in your best interest. And I'm here for your best interest.
Right.
So the more we price it correctly in line with what the market's going to bring,
right,
the more benefit goes to you.
Right.
So you just got to be honest with people.
That's right. And when you're talking and interviewing agents, make sure that you've got that, someone that's being honest with you.
Yeah.
As always, we at the Bartos Group here would love to have conversations with you, whether you're buying or selling. And Randy, I know we ask this every time, is it time to move?
That's different for every single person. Like
Right.
it genuinely is. I just believe year over year over year, decade after decade, the best place to put your money is in real estate in the United States. And I'd be happy to help you or have that conversation at least.
Dirt is a great place, whether
Yeah.
you're paying cash or you're getting a little mortgage.
Yeah.
We'd love to help you when you're buying. Again, I'm Mary Bartos at the Bartos Group of Premiere Plus.
And Randy Williams with TBF Mortgage.
We look forward to seeing you next month here on the Monthly Market Update.